Welcome all. So it was the budget today, and we are going to have some primary analysis of the budget in a few simple points. So this is the first budget of this coalition government. We were expecting some surprises, but they are not so much. So we are going to cover the key points, how this budget is going to affect the market, and what is relevant for the investors in few simple points. So point number one, the increase in capital expenditure in this budget. The growth has been lowest in last 5 years. So the capital expenditure for FY25 is budgeted to be 11.11 lakh crores. Now the growth over the last year is 16.84%. This is the lowest in last 5 years. In FY24 it was 28.38%, and in FY23 it was 25.42%. So the growth has slowed down. It can slow down the growth of the underlying sectors like infrastructure companies. We just expect some slowdown in growth, not any correction, and nothing to panic about this. On the other hand, the share for sector schemes and centrally sponsored scheme has seen a growth compared to last year. So these are more like agriculture and social sector schemes are there. The point number two, in this budget, the government has taken care of its coalition allies also. So the two states, Bihar and Andhra Pradesh, they have got a decent package. So Bihar has got 26,000 crore and Andhra Pradesh has got 15,000 crore. So it is also important so that there should be the political stability. Point number three is about the fiscal deficit. So there has been a big surprise. The fiscal deficit number which has come is 4.9%. Now it is significantly lower than 5.1% which the government projected in the interim budget, which came in Feb 24 before the election. So this is again lower than the last financial year, which was for 5.6%, and government is the path to bring it lower to 4.5% in next financial year. So this is the good news. The bond market has cheered for this. The yields on the government bonds have come down after the news. For bond investors, certainly it's a good news. On the taxes side, the short-term capital gain tax for the investors investing into financial assets has increased from 15% to 20%. The long-term capital gain tax has increased from 10% to 12.5%. So there used to be no long-term capital gain tax a few years back. Then it came 10%, and now it is 12.5%. And gradually we know that as in the developed economy and as more and more money move towards the equities from bank deposit, these assets may come at par with the bank deposit in terms of taxes. So the market reacted negative to this particular news. But since the budget is quite balanced, the fiscal deficit is under control. So market absorbed this particular negative news also. The correction which was today, we think it was healthy. It was again a temporary correction, and the budget has just given some breather to the market. Overall, the budget is good, and we think that any further correction can present buying or accumulation opportunity for the investor. Thanks for watching. We will come with more detailed analysis of the budget in coming days. Thanks.